Well, hello there.
Hello again. Long time no talk. No. So are we going to do this the same way still then?
Yeah, I believe so.
Okay.
I believe so. For until we have a conversation about doing it differently, definitely.
Okay. All right. Sounds good.
So we can see on the screen here we were red, and
Right.
the bear is clearly here.
Well, you know what though? If you really look at the market, the numbers, I mean, the Dow was up 47.
Yeah. Yep. Yeah. There was actually a
S&P,
divergence at
it
the end of the day.
really, really was, and it's very deceptive because it was a lot weaker than I think it looks.
Yes, I agree. There was a couple of things going on. I wanted to show basically, this is kind of the window that we're living in, even though we're mostly talking about day trading stocks. I want to make it very clear that the picture is getting worse. It's not actually getting better here. You can clearly see as we start moving to the right, the numbers are actually getting worse as far as stocks that are negative and the percentage that they're negative. So this 3 month window is kind of the one where, basically, I guess you could say, even though this measures the rolling 3 months, I kind of look at things from quarter to quarter, and it's not a good picture. And, if we go to the homepage here, this is actually what I was talking about with the divergence. You can see the Dow here actually had a double bottom, almost a triple bottom, when the Nasdaq and the SPY was clearly pushing through, and that's not actually something that we talk about a lot, Marion. But when 2 out of the 3 are doing something and the third one's not, either intraday or over a 2 day period, that I call that a divergence, and usually means it's not going to follow through. And this one's actually pretty clear here. Sometimes it can be a little bit weird because of how it opens and whatnot, but
Right.
um, I think this picture here is pretty much illustrating exactly how you started the meeting out. I mean, advanced declines, not hammered the way you would expect. I mean, the way things were looking today, and maybe I guess if you were just looking at some high beta stocks, especially Apple, we could look at that. You would feel like the market got punished. But this is, it's not even 2 to 1, really. It's almost 3 to 2.
Yeah.
So I guess we'll get into what the market looked like. This was actually what we were looking at coming into today. Yesterday was some pretty vicious selling. There was a pocket of opportunity here and there. You could actually see these two stocks actually were in a long list today: RAI and J&J. And you can see that we pushed through some significant levels yesterday. And coming into today, we were mentioning the right trade would be to see how we trade around this 188 level, and we kind of waffled there early in the morning. We didn't exactly get crushed through there. We danced around it before we finally pushed down. But this is essentially the call that we had this morning. SPY held the major support. That's the 188 I just showed you. Technically, should hold and attract value hungry buyers, and we kind of did that a little bit, but the financials just got pulverized out of the gate, which there was really pretty much no holding that up at that point. We did have two stocks, again, out of all the stocks on Wall Street, two that were kind of just strong yesterday in the face of the market getting hammered, and we noticed that some of these CVX, XOM, and some of the commodity stocks were in play a little bit this morning. Home Depot is setting up a really nice consolidation. We'll take a look at that one as well, but more for the tracking journal, because you don't want to jump a breakout until it actually happens. I guess what I want to say about the close, Mary, I kind of feel like we're indecisive heading into tomorrow. How could you feel strong about calling tomorrow's open? Do you have a call on it? I
No,
don't.
I actually don't. Some stuff got hit so hard, particularly the high beta. If you look at Google, Apple, Amazon, I think they all got hit. And then there's some other pockets of strength. I mean, you can see the green, the healthcare sector.
Yep.
Industrial goods also held up. But then the others were real mixed. We didn't have any real, across the board strong sectors that had a lot of strength to them. I mean, a lot of the healthcare, I guess, yeah, maybe. But no, I think maybe what I'm going for is consolidating around here before we get a push lower. I actually think we're going to get the push lower.
That was actually kind of what I was expecting today. If we go back to that chart of the market there, I kind of felt like we were going to hover today for a day or two at the support level, and we kind of ended up in the same spot. I mean, it's absolutely deceiving to say, it was a doji, even though technically at the end of the day it wasn't a doji. There was trades in both directions today, which this was actually the one that kind of, I think, threw a lot of people off in the morning. But we did make a comment. You really had to pay attention. If the market traded higher today, that's when you'd have to drop down to this lower right-hand corner here and pay attention to the volume. So if we did have a trend day higher and it was, let's say less than 100 million shares, wouldn't have really mattered that much. It would have been just basically the same as us flagging or pausing around this level. I mean, this is a pretty significant level. But the
Right.
fact that we did end up rolling over, we kind of got this bounce at the end of the day. It's basically the last half hour of the day. And we did do 150, probably be over 153 million by the time all the numbers are totaled and everything. We did not have a positive day. It was not bigger volume. I don't know if you would necessarily. I'm sure they're going to find a way on TV today to spin it that we didn't close negative. I'm sure.
Right. Right.
Just that's what they get paid to do. They get paid to say how good things are, so people keep tuning in. But we're here to we're here to say no. This is what's actually going on.
Right. They'll tell you the Dow was up 47. They'll forget, what happened to the NASDAQ.
Right, right. So I guess we could just touch on the fact that, as you had said, some of the high beta stocks actually got hit, and we'll take a look at the chart of Apple. But as you're looking at this box here, the larger the size of the box is the size of the market cap. So you can see Apple, Amazon, Facebook got hit. Google, obviously this one we're keeping an eye on now, negative on the day. A little bit of pocket of opportunity here today, but again, as you can see, we're just kind of hovering. So I actually think that the call you just made is the one that I would be making in the market right now. Again, if we're trading in a room together, I would tell all the traders in the room, look, we're probably going to consolidate around here for a couple of days. We got down to a major support level, especially if we have lighter volume. That's going to indicate that we're probably going to head lower. Even if we bounce a little bit, retrace a little bit of yesterday's move, not that big of a deal unless it's on monster volume or some sort of catalyst pops in out of nowhere. I would be leaning more towards the short side. But again, being a trading recap and not a market recap, we want to translate that into what does that actually mean for trading. What that means is when the market opens, if you are a market influenced trader, in other words, if you do top down analysis and you look to see what the market's doing, and then you drop down to the sector and you drop down to the stocks, if the market goes sideways in a little bit of lighter volume, you have to pull yourself out of staring at the market all day and say, when the market picks a direction, and that's just not going to happen in that lighter type trading. So you actually have to say, I'm trading the sector, what other stocks are in that sector, what stocks are in the industry, and lean on that a little bit more until the market picks up again with better volume. So I want to be clear. We want to help everybody with the trade management aspect just as much as setting up the trade, because I think that's really important.
Yeah, I definitely agree with you.
Okay, so heading into what we're looking at today, I didn't pull up what we did in yesterday's meeting, but I mean, just the fact that there's this few stocks, it's actually startling to me, quite honestly. RAI actually was hovering near 52-week highs today. Nike's still working off of the monster move higher on earnings. We had 120 as a 50% retracement level. TSO has actually had some pretty strong moves, and CYBR. This last one's an interesting one, especially if you're an active self-directed trader. We run one for both the long and the short side, but it's mostly this here. It's positive for the last 5 days. Now, obviously, the 20 in this case would be, if you know anything about Dow theory, there's the long-term primary trend, the intermediate trend, which is the one you normally trade, and then the fluctuations. And that's kind of what we're actually doing here. This is, we don't talk about it enough in the meetings, but this is actually multiple time frames here. This is the longer time frame, the 20. Then we have what is the last 5 days trading in sync with the longer time frame, and then what happened yesterday. So we'll actually get to the next slide. Couple slides down, you see how big that list was on the short side. But just want to touch on if we can take a look and see why these stocks were in the list coming into today. So we had Nike, and we were talking about Nike pulling back to what essentially would be the 20 period, the 50 period, the retracement level from here to all the way up here was right around 120, which is close to where it is. So Nike actually would be a stock, Marion. If we open neutral or at or near yesterday's low in Nike, I'd be bidding yesterday's low in Nike because it just pulled back 50%, traded with the market. If the market's neutral, I would love to be bidding this at tomorrow's low. So that would be one that I would personally be keeping an eye on tomorrow.
Right, I definitely agree. And I think we made the, we stated that we didn't really think Nike was a buy right there. It was a buy once it got down to the 50% retracement, right?
Right, exactly. Because I think that, let me zoom this out just a little. We clearly have support here that it could have pulled back to. It's not going to pull all the way back to the 20. That's a giant move, which would also take it back into the breakout. This is a conservative level. So when somebody's calling out a level, again, whether it's a moving average or whether it's a Fibonacci retracement, you still want to let price action tell you now it's time to get in. Because don't forget, don't blindly buy at a Fibonacci level. Don't blindly buy at a moving average. That it's kind of like an alert to say, okay, we're at a level that we should be holding. Now let the candlesticks tell us, okay, we got a hammer down there, or an inside candle, or a double bottom on the 5 minute, something along those lines. Then you jump in. So it's an alert with the moving average or a fib, and then you actually let price action give you an idea exactly when to get in. Cyber was another one. It didn't trade well. It traded with the market today, but here's essentially why I was in there yesterday. It's above the 20 up the last 5 days, and positive yesterday, 2% from the open. So again, this is a shorter term day-to-day one that an active trader can take. RAI was another one, and zoom this one out just a little bit here as well. Basically, we've had this pullback where it was holding above the 20 period and the 50. The 20 was above the 50, and we had this big double top here up at 44. We said if it gets above there and flags, which it actually kind of did this morning, in a better tape, this would have been a pretty good buy because 44 was the level. You can see here on the daily chart, got above it, flagged, and that should have been the trade to get long, looking for new 52-week highs, but the market was just too weak. So this would definitely be one to keep on the radar for tomorrow as well. And very similar to TSO. It's kind of weird. I'm talking about longs, but we want to be prepared for tomorrow in case the market does bounce. So now TSO, we had 1, 2, 3, 4, 5, 6, 7 days in a row institutional participation, 20-day breakout holding above, inside candle tomorrow now. So even though both moving averages are sideways, now we switch strategies as a trader and go from trend trading to trading a breakout. So the fact that this stock has been in play lately, we're probably going to be able to get a pretty decent trend on a breakout of this inside candle in TSO. So make sure you keep that in the list tomorrow too. Anything in particular you want to make sure we talk about on the longs, Marion?
Well, we had INFY this morning, and
oh, very nice, actually.
It gave us, it gave us a nice follow through there.
I believe J&J, if I'm not mistaken, also was in the list, just based on, again, strong close from yesterday. It's not an uptrend or anything like that, but we actually paying attention to this because it traded against or contra to the market getting pounded yesterday. So there was a little bit of strength in there yesterday. If you're a bullish only trader, you're going to be wanting to say, okay, what stocks are strong yesterday and the market got hit? Because you're either going to trade the VIX long or trade a stock that you can find if you're only a bullish trader. And, some short-term patterns like that are ones you could take notice. One of the ones that we've been watching for a while, obviously, is Foot Locker with Nike and UA, and they both came in with the market as well. UA sold off pretty hard today, very similar to Facebook, and I guess we'll get into those when we take a look at the bearish side of the tape. The inside candles today, not really a giant list. The only advantage to taking a look at this list today was the fact that we did not gap, and those are usually the best inside day breakouts where you get a close from yesterday and today's open kind of in the same place, and you find a good spot. But the better trades were here, and you can see clearly. I mean, if you take a look at the long list compared to the short list. Now, let me just ask you a trading experience level, Marion. Obviously, we're looking at the indices, and now you start to do your scans and you notice that there's holy mackerel. Look at how many more short sales are setting up compared to longs. Does that influence your desire to be short a little more aggressively?
Yeah, my bias is to the short side. Then definitely, I would say so.
Okay, so I just want to make sure I get it right. To do the work a little bit more deeper. I apologize, that's bad English, but if you do the work a little bit deeper, you need to get in, and it's not even intuitive. It's you need to dig below the surface to see what's going on besides what's just going on in the SPYs, the Qs, the diamonds, the IWM, the IYT. Get into the large cap stocks in those sectors. Get into the ones that are the largest percentage in those ETFs if you have to, and see what's going on, because it might just be one stock affecting how it looks, but there could be 7 of them going in the other direction. So you get a little better feel there. So this was, clearly, we'll talk about some of the large cap stocks that we feel are awesome day trading stocks. And obviously, Facebook is one of them. We kind of thought this was a good sign here, but this is when the market just couldn't hold the bid anymore. And, lo and behold, before 11 o'clock again, you've been calling it every day, which is, in my opinion, a very bizarre market where there's been better trading in the afternoon and in the morning. I've never seen that in the 15 years plus that I've been trading with this much consistency. Does it happen once in a while? Absolutely. Every day?
Right. And I would say for the last month, maybe, I have, on a whole, made more money 4 out of 5 days in the afternoon than I have in the morning. And maybe more than that. Maybe, 9 out of 10 days.
You know what it does too, Marion? It also illustrates the significance of making sure you don't overtrade in the morning when it doesn't make sense to you, or if you're not getting clear signals, because you want to be fresh and not milking a bad position or angry with yourself for overtrading in the morning. If and when the market does unfold in the afternoon cleanly, you're not stuck in a bad position, you're not angry, and you're not revenge trading. So that, that like, it's like an kind of like a side consequence that's positive. If you don't overtrade when it's not easy, you get these kind of moves in the afternoon. You're mentally and financially available to take advantage of them.
Yep, I totally agree.
So now we had Facebook pulled back. We actually drew this before the market opened, and I actually did not expect it to get all the way down there. Never mind, close below it. But now, Marion, again, talking about the trading pattern that we spent a lot of time on in the live room today. This would technically set up as one of those trades where it fully expected to not trade lower tomorrow. We might push lower off the open, but I wouldn't expect it to close lower. So the actual statistics on that is there's a 90% chance it'll trade lower, but a 50% chance it'll close lower. So there's a greater chance for trading higher on this after those last 3 days. Now, again, adding to the market, we're expecting the market to go sideways. The odds of that probably following through are actually odds and probably don't fit, but the odds of that not following through and closing lower, I think are stronger. So it's going to be interesting to see how that plays out. Obviously, we talk about our Netflix and how it's been trading above or below the $100 level. And, Mary, I got to say, the one thing I've been noticing, it's not getting crushed like a lot of these. It's certainly not going higher, but it's not getting hit like some of the other ones.
Right, and it actually tries to get, through 100 and hold, but when the market gets weak, and particularly when the large caps get weak and the NASDAQ gets weak, it joins the party.
So I guess talk about two that a little bit disappointing. Tesla obviously had interesting news today with the first SUV hybrid. Did not follow through again. Blame it on the market, not blame it on the market. Either way, I think that we both know this stock well enough that if it's got good news and it's going to get buying, it doesn't matter what the market's doing.
Exactly. I was actually in that long today, looking to see what it would do at 255, and it barely even touched. I don't even think it touched it. Came and once it broke down below 253, I was like, okay, I'm out of this one.
Well, you did. We can go back to the tape. When you were long in this area here, you absolutely were calling out 255 as the level to really tighten it up. Or I think you said be careful, but then you reworded it.
I did. I wanted everybody to be really careful. We were in a weak market. That was resistance. Did not want, and then we get a double top up there.
Yep. And then obviously Apple, which has had some decent news lately as well, and just continues to not find buyers. In the afternoon was just a $3 move that gave you plenty of time to get in the afternoon. Not only did you have this clean bear flag, but you also had an inside, and a shooting star. So you had a clean flag, lighter volume, 3 different candlestick signals as the entry signal, and it just never bounced back against you, other than at the end of the day there with when the rest of the market bounced. But if you're paying attention and the market's bouncing hard, obviously if you got a nice move like this, you got to tighten up your trailing stop there.
And I think we also had talked about earlier that it had been in a box 112 to 116. So when it was flirting with that 112 earlier in the day, we took notice, and then it did break that, and it rarely, barely even tried to recuperate. I think it got 50 cents.
And we had the financials. They're a little bit weird as well. Goldman just got absolutely slapped $5 right out of the gate, and it was actually tradable. It was actually a $5 move down from the previous day's close, and this bounce was with the rest of the market. I fully thought we were going to roll over here, but the fact that we did not roll over, like the market, everything got this bounce pretty much at the end of the day, but this stock did not roll down and retest these lows, and now we got this big old hammer on the daily chart, which basically took it right back to this level. So essentially what the stock is telling us now, this is a pretty significant level, this 170, 180, whatever, let's call it 172. So tomorrow, if you're trading the financials and you're looking at that whole sector, you must be looking at Goldman as the leader and see which side of 172 it trades over. Now, clearly the bias is to the short side, but that doesn't mean that a day trader can't use shorter term reference points like yesterday's high and low, today's tomorrow's opening price, and then trade around those reference points to use just that that shorter time frame as your bias instead of looking at the big picture. It could, same way with Netflix, Apple, and all of those higher beta stocks, Facebook. You can trade them off the shorter time frame. Just have to recognize that you're not trading with a lot of price history behind it, which would make you have a little bit less conviction, even though you could still be trading the stock. So I think our call for tomorrow, Mary, from a trading perspective, unless something changes overnight based on what we saw at the end of the day today, and how the first thing you called out today was a little bit of divergence in the indices. I'm leaning towards a little bit more where the market's going to go sideways to maybe drift a little bit the next 2 days, but that doesn't mean we can't be all over some really solid stock specific plays.
Exactly.
Okay. All right. Thanks, Marion. Have a great night, everybody. And Marion, thanks for taking the time in the afternoon. Appreciate it.
You're welcome, and thank you for doing this.
Okay. Send me a bowl of chicken soup.
I know you stop by.
Okay. Bye-bye.